Imagine waking up one morning and checking your portfolio, only to realize that a stock you've been quietly watching suddenly becomes the center of attention across trading forums, newsletters, and financial groups. That kind of moment is what every investor dreams of, discovering a hidden opportunity before the world notices it. And today we're going to talk about one such stock that many traders are beginning to whisper about. That stock is IBRX. At first glance, ImmunityBio may look like just another biotech company, trading quietly among thousands of others. But beneath the surface lies a complex story involving breakthrough biological research, clinical trials, FDA developments, and market psychology. And in the next 6 months, there are 3 specific scenarios, 3 shocking predictions that could send this stock into a completely different zone. These are not wild guesses. They are deeply rooted in real scientific catalysts, regulatory timelines, and the unpredictable psychology of financial markets. The first shocking prediction involves a clinical trial update that few investors are currently pricing into the market. ImmunityBio has been conducting significant research across several phases of clinical testing for its platform technologies. These platforms could, if certain data points come out stronger than expected, redefine how the biotech industry looks at immune system modulation. And the way these trials are structured, the next set of data releases could come at any time within the next few months. Now here's where it gets interesting. Because biotech stocks do not always move on good news alone. They move on unexpected good news. Imagine a trial reading that not only meets expectations, but significantly surpasses them in safety and efficacy. Market psychology suggests that this could trigger a wave of institutional interest, short covering, and a massive spike in retail trader interest. In the world of biotech investing, that kind of moment can cause shockwaves across the entire sector, not just within a single stock. But the real twist is that many traders may not expect this outcome because they are looking at current price action without understanding the underlying catalysts. Clinical trial data is forward-looking information, and if the upcoming readouts contain surprises, particularly in earlier-than-expected improvements, this could catch the market off guard. The psychology of surprise can make any stock soar rapidly because investors are suddenly forced to reevaluate what they believed was already priced into the share price. The second prediction centers around regulatory developments. Biotech companies live and breathe on the timelines of regulatory agencies. A delay can destroy investor confidence, while an accelerated review or unexpected approval can create massive upward price movement. In the case of IBRX, there are certain regulatory milestones on the horizon that are not yet fully reflected in the stock's current valuation. These could include Phase 2 of 3 determinations, breakthrough therapy designations, or prioritization statuses that fast-track review processes. Now here's the suspense. Regulatory agencies rarely make public announcements until decisions are finalized. That means investors often do not know what is coming until it happens. Imagine waking up one morning to news that an application was granted priority review or that an entirely new designation was given to a therapy platform. That kind of announcement can trigger a chain reaction. Analysts raising price targets, institutions increasing exposure, and retail traders piling into the stock out of fear of missing out. Yet many people discount this possibility because they assume the regulatory process moves slowly and predictably. The truth is that regulatory agencies have bursts of activity, especially when the underlying science shows promise. If ImmunityBio's data and documentation persuade reviewers ahead of usual timelines, this could create one of those bursts that pushes the stock sharply higher. The third shocking prediction doesn't involve science directly. It involves market, psychology, and investor behavior. In financial markets, perception often outweighs reality. A stock does not rise because earnings are good. It rises because investors believe earnings will be exceptional. A stock doesn't crash because fundamentals are weak. It crashes because investors fear that fundamentals will deteriorate. And in the case of IBRX, there is an opportunity for what traders call a narrative shift. A narrative shift occurs when the story investors tell themselves about a company changes, not because anything fundamental always changed, but because the perception of future potential has shifted. And this is a powerful force. Once a narrative shifts, Capital flows rapidly into or out of an asset, often with minimal regard for underlying financials. Now imagine the following sequence. Unexpected positive clinical data hits the news. At the same time, regulatory timelines accelerate. Then media outlets and financial analysts begin talking about IBRX as a biotech breakout story. Suddenly, the narrative surrounding the company shifts from uncertainty and speculation to possibility and optimism. That combination alone could draw retail attention, hedge fund interest, and algorithmic trading inflows. Warning disclaimer. This video is for educational purposes only and is not financial advice. Always conduct your own research before making investment decisions.